I've seen a lot of people ask me how to draw your supply and demand zones, and honestly I've seen so much people drawing out them wrong, so I thought I'd just make this quick video to give you some free resource and teach you on how to draw your supply zones, how to identify a good and bad demand zone, and then I have a quiz at the end to test your own knowledge. Alright, so what are supply and demand zones? A supply zone is when a lot of sellers stepped in, as you can see like this, and price reacts downwards. This is where you usually look for sales, and the demand zone is completely the opposite, where a lot of buyers stepped in and it moves to the upwards. Now, for example, right here, you have a clean demand zone. As you can see right here, you got 3 bullish momentum candles to the upside, and the very first bearish candle before that move up is going to be your demand zone. For that, it's pretty simple. Buyers came in with so much strength that sellers are going to want to push price back down to fill those leftover orders. And that's exactly where we react from. So this demand zone. This is where the big banks want to enter from, and this is exactly how we catch those high risk to reward trades. And there are actually pretty strict rules on how to actually draw these zones so you can actually get those perfect entries. So I'm going to go over on how to actually draw your zones. So I've got 2 ways to draw your supply and demand zones. This is the normal way and this is the accuracy zone. So let me go over the normal zone. As you can see, you just draw it out from the first bearish candle after the strong move up. You draw it out from the lowest point you reached, and then just the full body with the wicks. Alright, you include the wicks. Now on the accuracy zone, I'm going to explain everything more detailed later, but right now I'm just going to go over the basics. As you see, on the accuracy zone, you would draw it out from just the body after the strong push down. On a supply zone example, this is a demand zone example, you draw out from the body and not like this. And the reason for that is because this wick of this bullish candle went further than the next candle. So I have an example right here. As you can see, this, if the wick came over here and it did not go past the next candle's lower wick, on a supply zone example, you draw out normally just like this. But now, once this wick has passed this point right here, you draw it out from the body and then the highest wick. So for example, this wick came all the way over here, you would not draw it out like this, you draw it out like this. And for example, if this candle came right here, even if it came identical, as you can see just like that, you draw it out as a normal zone. But if it went even a tiny bit over like this, you would draw it out as an accuracy zone, so from the body and then the highest wick it reached. So let me show you a demand zone example on this as well. I'm going to ask you right now, would you draw this zone as an accuracy zone or a normal zone? This is called a normal zone, and the reason for that is because this wick did not go above the next candle's wick. As you can see, if it did something like that, it will be a accuracy zone, just like this. And for example, if this wick came all the way over here, you would draw it out from just like this. So let's say your next candle opens over here, it does like that, and it wicks all the way down over here as well, just like that. You would draw it out from this wick, so just the lowest point. And also your zones are not allowed to be tapped. I'm going to explain that later as well, but right now let me just go over the way how to draw your zone. So hopefully you understand how to draw them. I'll give you a quiz in the end as well, so you can actually test this yourself. But as you can see, if this wick came over here, you draw out normally, and if the wick went above it, you draw it out with a zone. So let me show you an actual live example too. Alright, so as you can see, this is a zone here. You would draw it out from the body and then the lowest wick, as you can see like this. So this would be a normal way to draw this zone, but as you can see, this is the candle it needs to like come above, and it's exactly what it did. So you draw it out from just the body and the lowest wick. In this example, you draw it out from just the body, and let's say, well, in this example it would be pretty crazy, but let's say if this wick of this candle came all the way here past this point, as you can see, this point right here, you would draw it out from just the body like that. But in that case, it did not happen. This is a normal zone, but if the wick passed through the next candle, you draw it out as a normal zone. You can also just go back test this yourself. Let me find a few more examples. As you can see, this is an accuracy zone right here because it passed the next candle's wick. As you can see, once it passed this candle's wick, you draw it out from the body, and then the highest wick it came. So as you can see right here, I'm making this all messy. As you can see right here, it's the highest pointing wick. Let me show you one more example, and this is a good example as well. As you can see, you would not draw it out like that. You would draw it out like this from the body and the lowest wick. So you would not draw it out like this, not like that, but like this. So all the way down over here. And that's how you draw your zones. Now let me show you on how you identify good and bad zones, invalid zones and valid zones. So first, let me go over the actual reaction from the zone. So let's say you have a zone like this, okay? You have liquidity above the zone, which makes this zone actually valid. You had a strong push up and you have a zone like this. You need a reaction from the zone. So as you can see right here, I'm going to show you an example of an invalid trade. Would this be a valid trade? As you can see like this. I'm asking you again, is this a valid trade to take? And it's not, because there's two reasons. One, because it went past the zone. The wick or the candle or anything is never allowed to go past the box. Okay, that's number one rule. You can write this down. The second rule is it's not allowed to close inside the zone. That's two rules. So let me show you an example where it's actually valid. So as you can see, this trade right here. This trade did not go past the zone. As you can see, if it went past this point at any point, it would be invalid, okay? And if it closed inside the zone, if this body closed even a tiny bit inside the zone, it would also be invalid. And also, you need to have liquidity in distance of the zone as well. So as you can see, this is perfectly in distance. On USD JPY, have 30 pips max distance your liquidity is allowed to be from your zone. Either it's a demand zone or a supply zone. And as you can see here, I'm not going to go over this, but you would enter right here, 1 pip stop loss and a nice risk to reward. Now as you can see here, this is a valid loss actually. Now you draw it out normally and it's a completely valid trade, but it got invalidated once it closed inside the zone. So as you can see, you would not take a re-entry or anything, but this here is a valid trade to take. Maybe probably wouldn't be a trade to take because it's actually reacting from the supply zone, but the reaction is great and it did invalidate it right after it. As you can see, it closed inside the zone, but this is completely valid. As you can see, it wicked inside and then you took the entry. Now, let me start talking about on how to identify good and bad zones. So actually, I had pretty much a good example right here. So if you have a really strong push down on a supply zone example, right before you create your supply zone, you leave imbalances. As you can see right here, you have a strong imbalance in the market where price wants to come back and fill. This is a good sign of a good demand zone. Also, let me find quickly another example. As you can see right here, you have a demand zone right here as well. Like as you can see, and you've got so many like gaps here. Price needs to come back and fill. As you can see, this is a strong demand zone, really strong. All right, so that's about it for the actual zones. Let me now talk about which zones would you prefer. So let's say you have 1,000 zones here. All right, all valid trades. You got a zone over here, zone over here. All right, so you got all these zones. Now, which one would you prefer to choose? I'm gonna say this right off the bat. You would not ignore unless they give a perfect reaction, but these are lower probability, the middle zones. This is what you would mostly look at. The bottom zone, the holy grail zone, is all the way at the bottom, and the first zone. So, well, this doesn't have liquidity. If it does something like this, completely valid trade. Now, if it invalidates it and comes to the middle zone, unless it gives a perfect reaction and is an A+ trade, it will be a good trade to take. But if it's like choppy like that, not good liquidity, makes bearish structure to the zone, it will not be a good trade to take. And also these zones down over here, unless this is very far away. As you can see, if it did something like this, okay, what am I doing? So it did something like this. Wait 1 second. like this, and this is the bottom zone, you would still consider this as a bottom zone because it's already too far away. So let me show you an actual live example here as well. As you can see, let me just delete these real quick. As you can see right here, you have a first zone. Well, let me just delete these as well. As you can see, you got 3 zones here. Let me go on replay mode, and as you can see, you have one zone over here. That's your first zone. Then you have the middle zone, and then you also have the top zone. Now let's see what happens here. So it wins off the first one, then it comes back up, reacts from the second one, but since the middle zone is not that strong, that one lost, and then it comes all the way back to the above zone, the best zone, and then it took out the low, which is pretty nice, and then it had a nice reaction from that, and it won from that as well. So that's the reason behind taking middle zones, and just would not work. Let me just draw it out correctly so you would not misunderstand anything. There you go. And yeah, also bad thing about drawing out zones as well is you would like your zone to be part of a top move. So as you can see here, what I mean by this is you would like your zone to be right here instead of right here. So what I mean by this, you would like your zone to be on top of a move instead of a middle of a move, as you can see like this. Now it doesn't make this trade invalid, it just makes it lower probability. So what are good zones? This right here, well, it's not valid because it doesn't have any valid liquidity, but it's the top of a move, as you can see, top of a move. And also this zone right here is an accuracy zone, and these zones over here are more lower probability because they don't have any structure within it. But as you can see, also these zones are really good as well. If it made some, actually, as you can see, this zone made a high and then created this demand zone, this supply zone, my bad. And also these zones where it's part of a consolidation. So let me just try to find a quick example. Well, as you can see, kind of this trade right here, I actually didn't even have a trade as well, as you can see like here. But as you can already see, it's part of a consolidation right here. As you can see, this move over here, price usually likes to react from these places. Let me find one more example real quick. Yeah, this is already a good example. As you can see, you have a massive fair value gap, massive move right after you create your demand zone. Again, this is not valid because it doesn't have any liquidity. This is a bit too far. As you can see, like I said, 30 pips max distance from your zone, even on GBP JPY, this is 70, so that's way over the limit. But as you can see, what I was trying to say is you have consolidating just before the zone, and that is pretty nice. This is pretty much already a perfect A+ trade. You can also even go back in time and see if you got some support and resistance levels on them as well. But I'm not going to go over that in this video because I want to just show you how to draw your supply and demand zones, so people in my free Discord can actually understand how to draw your supply and demand zones and won't be asking me like, is this the right way or not the right way or whatever, because then you can come back, watch this video, and you can just learn. All right, now for the quiz part, I'm going to quickly make a quiz that you can do, and I'm just going to ask you questions on, is this a valid trade, is this not a valid trade, is this a good demand zone or a bad demand zone? Just do the quiz, let me know in the comments the results, and yeah, stick around. Okay, so let's start with the quiz. First, mark out all the accuracy zones. Which zone is the strongest here? Is this an accuracy zone or a normal zone? Is this zone valid? Because the zone has already been tapped, as you can see, this has already been tapped, so it's not valid. Is this zone valid? Is this zone valid? Is this trade valid? the zone is drawn wrong in this example. Here it's an accuracy zone, which means price hasn't even tapped our zone yet. Is this valid? Because price has not tapped into the zone, but it came pretty close, as you can see. Is this zone valid?
Yes, because it's an accuracy zone. Is this trade valid? No, because price has already closed inside our box. Is this zone valid? Is this zone valid? No, because price has wicked through our box.
Join my free Discord and thank you for watching this video. See you.